Good afternoon, everybody. This is Thomas Wood with Microquant. We're going to be taking a look at today's trades of the day from the live trading room this morning. We had several. Today was a great day. We had many really good trades, but I'll try to highlight three of the main ones that were very successful. The first one, we closed off one of our swing trades that we've had on since last week. We had initially longs on the 23rd, literally just a couple ticks up from the low. We also added positions on last Thursday, and last Friday at these undervalued price points while our MQ regression line was continuing to head higher. Today we covered at significantly overvalued, up around 1890, taking out a total. If you were in from the initial position, you took out around 80 ticks. If you were in on Thursday or Friday, they took around 60 ticks. So either way, it was a great trade. We also had another really good trade today in the euro. We shorted the euro up here where this red down arrow is. The reason we did that, if you look at our MQ regression line, it was starting to roll over to red, so signaling downtrend. So we were shorting it significantly and moderately overvalued prices. What we did is we drilled down onto a 1-minute chart and looked for a divergence for our entry. So we had to risk as small of an amount as possible. If you go back to where that arrow is on the 1-minute basis, we were short this morning right around 9:10 on this 1-minute bearish divergence where we had higher prices here but a lower high indicator here. So you can see the indicator, our momentum, was starting to die off even though the prices were continuing to climb. So we went short on this bar with our stop a few ticks beyond the high, ended up taking a total of about 40 pips out of the market. The reason we covered, if you pull up this market on, if you pull up the euro on a 30-minute chart, you can see we had a 30-minute trend line coming across. So we were short from literally just a few ticks off the high with our stop beyond the high of that bar. And then we covered moderately undervalued against this trend line and got out. And that, like I said, was around 40 ticks or 40 pips in the euro. Another very successful trade with a very good win-loss ratio. The last example I want to show you, we had another just outstanding day trading crude oil. We ended up taking a total of around $2.40 out of crude for the day. The first trade we had was a long here. We were trading with regression. So the regression is our trend indicator. We were on a 2-minute basis, so we were trying to find some short-term scalps. And you can see green means uptrend. So we went ahead and got long on this uptrend at this undervalued bar right here where this blue arrow is. We risked the low of the bar because we got in as soon as the momentum started to turn up to the upside. You can see right here we had a lower momentum and then we had an uptick on the next bar. As soon as that bar closed up, we bought into crude oil. We went long, we closed the position and reversed the position as soon as we had a bearish divergence. And you can see here we had another one of those bearish divergences similar to what we had in the euro where we had higher prices but a lower indicator reading. You can see if you look at our momentum, we had higher prices, but the momentum had died off essentially. We were also moderately overvalued. So we got short on the open of the next bar after the momentum died off with our stop just beyond the high and ended up covering this at the low, just a few ticks off of the low, giving us about $1.20 to the downside in crude. The reason we covered the low and then reversed our position to the upside, which we're now up around 65 ticks if you're still holding your long positions with the break-even stop. We got back in right at around 95.52 is when we talked about getting in. That's just a few ticks off the low. The reason we decided to get back in long is you pull back up that 240-minute trend line. You can see right where we came up to the trend line. We came right down to it, touched it. That gave us the okay to get long. Like I said, we got in around 52, which wasn't the low. We were about 10 ticks off the low. Put our stop just below the low, so we risked about $100 a contract with that trade and ended up, as I said, we're now up almost $1 a barrel to the upside now. We're up 90 cents. Actually, it's continued to move up. So we're in good shape now. We had another great day. We're working on week number 11 with only 3 losing days total. We have yet to have a down week overall. Hopefully we'll continue to trade well. Until next time, happy trading.